Hi and welcome to the Market Alert for Tuesday, the 28th of October 2025. So gold tests down to 4,000 as big tech and Bitcoin rally on China deal hope. Amazing, isn't it? A week and a half ago, there was going to be a 150% increase in tariffs. Now there's a so-called mineral deal done. And the market's making all-time highs. Brace for further bullish flows. This is into the markets as gamma flips negative on extended gains. And as these news items here, headlines, US stocks hit fresh record highs on US-China trade optimism. The deal isn't done yet. S&P, Dow, Nasdaq 100, Russell 2000 all printed fresh all-time highs during yesterday. And stocks rise on US-China optimism. So just a repeat there. The US and China agree on a framework for a deal. You see, the deal's not done. It's only the outline of it, and the markets are up vertically. China expected to delay new rare earth export controls, so that's not looking too bright. US signs trade deal with Vietnam, Thailand, Cambodia and Malaysia. Zelensky says Ukraine to expand strikes against Russian refineries, and soft US 2-year note auction. So nobody's buying the 2-year treasuries. Strong 5-year auction though, so further out because the rates will be higher. Trump says might sign a final deal on TikTok on Thursday, so we'll see if that happens as well. However, economic news for today, we've got Richmond manufacturing and CB consumer confidence, but the government is still closed, so you're not going to get these numbers. They only issued the CPI numbers on Friday because they felt that the market would need it, which obviously came out better than forecast as well. But we still have no proof of whether that was real or not. And today's world, I'm afraid, we don't know what is real and what is not either. You know, it's very strange world. It's changed massively, hasn't it? It really has. Another thing that before we get to it, have a look at this video. We'll put the link in the description, but this is well worth a look at. Someone big is crashing gold and silver prices. Just going back to the government shutdown, the CTFC, the governing body that regulates all of any potential fraud, criminal activity in these markets, is shut down. The weekly commodity reports aren't being produced either, so we can't see where any of the silver is actually going and whether the majority is long or short. So it's a fun time for the manipulators, but do have a look at this. It's well worth a look. And like I say, I'll put the link in the thing. Rob Kientz is the chap on the right. You probably can't see him fully. Let me just bring that down. He's a very, very experienced accountant, auditor, and he's written a lot of stuff about the manipulation of the markets, and he goes into great detail about what's currently happening here. So do have a look at that. Right, let's have a look at the markets and these new all-time highs across the US markets and kick off with the Dow. So yesterday, new all-time high, we can see there 47,595. And overnight the market's just slightly lower. The one thing to note though is this gap has not been filled yet, and if we have a look at the 30-minute chart, you can still see that gap. It didn't come down enough to fill it. Yesterday the market's sideways and then up before the close of trade. It's still looking rather bullish though at the moment. Maybe the gap isn't going to get filled. Sometimes they don't. But at the moment we're looking towards making a new all-time high once again in the Dow, heading towards 48,000, which quite easily happen if we get the 0.5% cut in rates tomorrow evening from the Fed there. Right, let's have a look at the DAX. Well, the DAX is still lagging a bit, stuck in a bit of a sideways move there, but putting in one of those sort of ascending triangle type of patterns where the market usually breaks out to the upside, and if the momentum stays with the upside with the US markets, then it's likely to drag the German DAX to the upside. That's the normal pattern of events. The gap in the German DAX was filled. It came in just about let's have a look at this, couple of hours into the trading yesterday. The market traded down to Friday's DP and close, and then move back to the upside down to the 200 MA overnight as well, where the market is finding a bit of support and wanting to move back to the upside there. S&P puts in a new all-time high, 6,884, so heading to the 6,900. I wouldn't be at all surprised if we don't get to 7,000 in this market. I don't mean by Christmas, before we start to see this move to the downside. I mean, if you look at the monthly charts in this, you go back to April of last year, you can see how much the market's actually moved to the upside. The 30 minutes, again, still not filled the gap, just like the Dow, but coming off the DP area there at the moment to try and get above yesterday's high to make a new all-time high. Meanwhile, in the UK, new all-time high yesterday, 9,684. Market showing an inside bar thus far overnight. And you will see yesterday, both in the German DAX and the FT100, the gap was filled. So again, free to move back to the upside there. Now into the US dollar, the market is making lower highs, and yet the metals are being hammered to the downside. Now that's not right. That's a market that has an inverted relationship with the precious metals, and yet the metals are being hammered. So let's have a look at those. Right, so yesterday, another down day. Go back to yesterday's market alert. I said this is what they're going to do, and I think they're going to continue to do this. They're going to go all the way down to the 89% retracements. We're going to see a down day for every day this week. I can't see any hope at the moment of this market being turned around. They have full control. The government shut down. The CTFC is shut down. There is nobody watching what they're doing. So it's like the fox has taken control of the henhouse here. This would be a different picture altogether. For me, if they weren't shut down, the pullbacks would have still occurred, but not to the severity, and they haven't finished yet. I wouldn't be surprised if they don't try and get this down to $40 per ounce personally. And if they do, I will be buying more, so I will be thanking them. I don't mind when this happens at all. This is, for me, an opportunity just to add more to it, because eventually, when the US dollar fails completely, and it will, and they want it to, because they want everybody with digital IDs and a digital currency, which will be the new system. The old system will be ignored. The debt will be written off. Everything's being tokenized with crypto and etc. So I will buy more. So if JP Morgan and Co. and all the rest of them want to keep slamming the price of silver, that's fine by me, because one day, just one day, they will turn ship and they will move it to the upside. The reason they're doing this is because they don't want the US dollar to die just yet. But when they do, they will be positioned with real currency in both gold and silver. Now, I know silver has two elements to it. Obviously, one is industrial and the other is currency. But that's the only real currency that's going to be left. You can go and have a look at the Bank of England digital pound. You can see what Starmer's doing with digital IDs. You can see that they want to ring fence us all into a prison where they have full control. This is not a conspiracy theory. This is a fact. And there's a coordinated effort at the moment globally. This has just gone off a bit too fast to the upside. There was a bit of a shortage to fill the silver trades, and that's why we've seen it take out the all-time highs, and now they're bringing it back. And I wouldn't be surprised, at least down to 44, the 78% retracement, because that would be a $10 pullback, which is about right for silver. But I wouldn't take it away from them either to move lower. But you might say, well, what about tomorrow night when they cut rates? It's already factored in. That's why they're bringing the market down, and it will continue down even after that as well. And if they don't cut rates tomorrow night by 0.25%, then you are going to see this go down to $40 per ounce. And I don't care what the fundamentals are, whether there's shortages or there's the huge demand, the bankers have control because they own the paper market. And the paper market is dictating the prices, and that's exactly what we're seeing there. If we look at the 30-minute chart for yesterday, we come to the LBMA fix. What do? They pound the market to the downside. And overnight, the market is also moving lower. All it's got to do is take out yesterday's low, and it will continue to the downside. And that's how I see this playing out this week. Until the government are back, this market is going down, down, and down. In gold, same thing. As you can see there, overnight, already moving down to the 78% retracement from this move to the upside there. And this is also going to continue to the downside as well. It's got to hold at the 89 and the 50% retracement. If not, we continue lower down to $3,500 easily, having come from what was the all-time high? Let me just put this in. 4.3. That's right, 4.3. So $1,000 off would not be unthinkable either in these markets for the elite and the world governments to actually buy, or central banks, not the government, central banks to buy more gold. So at the moment we're down at 3.9, but it has the potential to move down to those sorts of levels. Without a doubt, 3.3 area. And certainly 3.5 to begin with if they continue to hammer the markets like they are at the moment. And they can do it because there's nobody watching over them at the moment. Again, all it presents is a buying opportunity. Yesterday, we go back to the LBMA fix down, and we're already below that now. And that's what I'm expecting to see of silver, except it will accelerate faster by the time we get to the lunch time. Right, let's have a look at the gold-silver ratio. And as I mentioned in this yesterday as well, that we would move up towards this area, and that's exactly what we did. Yes, it's come off a bit, and gold's down a bit more percentage-wise than silver at the moment, but we're not finished on the upside yet as far as this is concerned either. And that's, again, is fine by me. I'd rather buy 89 silver coins for the same price as one gold, and take advantage of the 3 extra ones for the same money from where we're currently, well, actually 4 or 5 from where we are at the moment. So ramp it up as much as you want. It doesn't make any difference to me. The coins that I bought in COVID have returned more than 100% during the last few years. So I do it. It's fine by me. I haven't got a problem with it at all, because I think in longer terms and can see what's coming down the line with regards to this digital ID and the digital pound. I mean, let me just show you. And there you go. You can now see, I'll go all the way to the top so you can see it. The Bank of England, go to the actual, there we go. So you can see there's the digital pound waiting to be up and running. It's already being tested as well. I had a chat with AI about this, and it's already out there being tested behind the scenes as well. So you'll have the new system, the old system. So yeah, it's not good news. This is not good news at all. So again, if you want to pound the price of gold and silver down, then feel free, because the central banks have been buying it by the tons since 2010. So there you go. So that's the gold-silver ratio. Let's have a look at the trades from yesterday in the German DAX 2-minute chart. So yesterday we were sideways, and of course we filled the gap. As I said, within the first couple of hours we saw the market moving lower. We had a potential buy signal there. We took out the high, which was important, which you can see there, and then we moved lower off that, and then we bounced back, and then you'll see in just a moment that we head back to the downside. But we fail initially, as we've got the fail signal there, and then back up first for a bit of a bounce, and then down. Prices went once more to fill that gap that was in the daily chart. We then went over to the US, and let me just bring this back a moment. You'll see me changing the times, I think, on this one, because I thought, hang on a minute, it was not set up properly. There we go. So you'll see as I move forward the white change there. So I forgot to put the clock back on this one after I reminded everybody in the alert yesterday. So the DAX moves higher with the US in the afternoon, and all this good news from Trump all the way back to the high there. So a nice trade there to make up for the loss in the morning. Then we get to 3 p.m. because the US hasn't put their clocks back yet and gone off the daylight savings. So the market then easing back later on in the afternoon. So where are we overnight? We're trying to move to the upside at the moment, stuck in a bit of a sideways move. We need to get above the DP, but first the 200 MA, DP close, and then make our way back up to yesterday's high. But like yesterday, in the European markets, I expect a bit of a sell-off to begin with before the market finds any sort of support. Right, so that's it for this one. Apologies, it's a bit longer than normal, but there's an awful lot going on, which is worth knowing. So with that, have a great day, and as ever, thanks for watching. See you in the next one.